Now let's kick this bulletin off in Egypt, and the North African nation is now the top investment destination in Africa. Egypt has replaced South Africa as at the top due to its superior economic activity score and sluggish growth rates in South Africa. Now this, according to a report by Rand Merchant Bank, the southern country is now second on the list. According to the report, the top 10 African destinations for investment also include Morocco in third place, Ethiopia in fourth, and Ghana in fifth. Now, Egypt has implemented a range of reforms aimed at improving its economy. The most significant was a decision in November to allow its exchange rate to float freely. There were also reductions in fuel subsidies, and the country has secured a 3-year $12 billion loan from the IMF. Well, let's get more on this. Yasser Hakim now joins us in Cairo. Yasser, as always, welcome to the show. And let's start with the fact that Egypt is now the top investment destination in Africa for 2018. What do you think, Yasser, has put the country ahead of other major African economies?
First of all, Uchi, you have to remember that Egypt was a leading country before until the 2011 uprising and all the political chaos that has destabilized the economy and pushed Egypt below, pushed Egypt down. Now it's back again because pre-2011, even the growth rate was exceeding 7%. So the infrastructure is there, the basics are there, the market is there. Egypt has a huge market that is very attractive for investors. The return on investments is the highest. You've got the high consumption. You've got also the location. You've got the infrastructure in the way that now there has been in the last 2 years even more improvements in the land that is acquired for investments, in transportation, in the ports, in the different 4 or 5 major ports now that would help the transport of the products. You've got a well-trained labor market, cheap as well, especially after the flotation of the Egyptian pound. So you have a product that is cheaply produced in the country, so you can easily export to other countries in Europe. You have the access to Europe, to Africa, to the Middle East with the tariffs and all the economic agreements and pacts that Egypt has signed. That would allow your product to be invested, to be exported outside of Egypt or in the big Egyptian market that exceeds 90 million consumers. So in addition to the new investment law, you have an attractive top destination that pushes Egypt to lead again in the continent, and not just in the continent, but also in the Arab world.
Now, Yasser, we'll talk a little bit about that investment law, but it certainly looks like the banking sector has played a major part in this development. The central bank did reveal today that they provided about $55 billion to fund trade since last year. So give us a sense of how the sector has fared during these tough economic times in the country.
Now, the central bank has been criticized by international financial institutions in the last decade or so or more for being strict in its regulations, for controlling the banking sector and the banks, whether the state-owned banks or the private banks in the country, and monitoring very, very closely every move and ensuring that there is a strict control on banks. And this does not work well with the Western formula. But however, this has been the reason why the banking sector has managed to survive the instability of the last 5 years, and also the flotation of the Egyptian pound and the strict measures, the austerity measures of the last couple of years. It even went back to, remember, the Lehman Brothers and the economic recession of the early 2000s. The investments and the banks in Egypt have managed to survive this and have gone up very strong. And this is because of the central bank's strict control. Now, in the last 2 years, the problem in the import and exports and the hard currency in Egypt, that was solved by trying to control the withdrawals and how to have a hard currency in the country, and the banks control this. And this is why when the IMF loan came in, when the loans from other countries and the Gulf came in, when the remittance of hard currency came into the country, all this was managed to be saved. And saving all this hard currency has managed to allow the banks to put the money into a priority, and that is trade, and trade of certain goods. Not all goods were traded in the market, not all goods were allowed to be imported, and the money went into the basic necessities and into the basic goods that the country needs and the population needs, and not to the what you can call the unnecessary products. And by time, in the last 2 years, the central bank has managed to garner a lot of the foreign reserves that reached a record $36 billion. And at the same time, the banks have managed to save a lot of hard currency to be put into the market for trade and for basic necessities. And at this point, higher interest rates for the Egyptian pound has led to many people changing their hard currency into Egyptian pounds, which left also a bulk of dollars and hard currency into the banks, because Egyptians are now getting rid of their hard currency and trying to change into Egyptian pounds, noting that the interest rates have exceeded 20%, and this is considered very important for many of the Egyptians, and therefore a lot of dollars in the banks, and so a lot of dollars, enough money to trade in the market and also to give to investors.
Well, many thanks, Yasser, for that update. Yasser Hakim joining us there in Cairo.